let's meet the speakers. First, we have Brendan Patterson. He is WatchGuard's VP of Sales Engineering. He has utilized his 20+ years of experience in security and networking to lead WatchGuard in adding capabilities for advanced malware detection and SD-WAN networking into the product line. Next, we have Danny Banks, who is WatchGuard's Technical Director of Business Development. He has used his 20 years of experience in technical sales to aid in his responsibilities, which include strategic account management and strategic partnership acquisition. And last, but certainly not least, is Nick Graff, who serves as the Vice President of Information Security for CNA's Specialty Risk Control Unit. He has more than 15 years of experience in information security and specializes in data leakage prevention, security policies, incident response, data breach, and security awareness. Now, what you've all been waiting for, let's get into ensuring your digital future. Take it away, Danny.
Thanks, Liz. And so, hello, everyone. Once again, my name is Danny Banks, and I'm going to kick things off for us today. And really, what I want to do is set the stage, right? There's two key topics that I'll cover, and then we'll let Nick take it after that. But first, what I'm going to do is highlight the importance of cyber insurance and how it can help you protect your business from cyber threats, how it fits within your existing cyber security framework, and I'll explain why, right? Why organizations need it with some stats and some examples that we have here. Secondly, then I'll touch on with some additional slides what I'll describe as why organizations must be aware of cyber insurance requirements, right? As we all know, cyber insurance premiums have gone up, and there's a reason for that, which we'll cover here a little bit today. And then finally, we'll talk about those requirements and actually what they mean in terms of the growth of a managed service provider, which I know some of you MSPs have snuck onto the call today. So we'll talk about that a little bit. But first, the importance of cyber insurance. And when we look at the definition of cyber insurance, I won't read it here, but I like how one of our partners put it this way. Said if your company, leverages data, technology, any sort of network connectivity to drive growth, right, of your business, you need cyber insurance, right? We know that the frequency and the severity of data breaches are increasing, right? There's remote workforces now and endpoints that are beyond the perimeter that are exposed. And cyber attacks continue to grow, and also government regulations and privacy laws are becoming more strenuous as well, right? And so organizations need protection, right? And that protection comes with cyber insurance. And so the question is, how do you not let it disrupt your business though, right? Which for many of you means turn that question around and ask, how can cyber insurance fit into your existing cyber security strategy, right? Turn it into an opportunity, not a challenge, right? And so as security practitioners, I think this is where things get exciting, at least for me, right? Not long after I started looking at cyber insurance and had discussions with cyber insurance carriers, I had a light bulb moment, right, if you will. And it was this. I said, we all know the importance and the value of a defense in depth security strategy, right? Or a layered security strategy. In other words, if you have one mechanism that fails, another one steps up immediately to help defend whatever attack or adversary that you're facing, right? And multi-layered security or defense in depth accounts for multiple attack vectors, right? Which increases the security of your organization. And here's the thing, you can add more layers of defense, right, to your defense in depth strategy. And so, well, when I started researching cyber insurance, 6-7 years ago, what drove the passion for it for me, what drove it home for me was thinking about cyber insurance as a last line of defense, okay? Or last line in your defense in depth strategy, right? That final layer of course, listen, there's no, prevention that's 100% perfect, right? We all know that. But if, when you eventually experience a data breach, the question will be, do you have protection, right? Do you have protection? Do you have the insurance coverage to cover the multiple costs that your organization will incur, right? Do you have coverage to protect your business overall? And so that's what I think of cyber insurance as a last line of defense, right? It's critical. It's that final thing that can act as a protection or mitigation to reduce the severity of the incident, right? Help you not go out of business, okay? But again, let's be careful, right? Does cyber insurance prevent a data breach? No, right? Just like car insurance doesn't prevent a car accident, right? So cyber insurance doesn't prevent a cyber attack per se from occurring. However, if all else fails, right? If or when there's a data breach, you can lean on your cyber insurance provider to assist you with your protection, your mitigation, your incident response, all of those costs, et cetera, right? And so then the last point here is that as security practitioners, I suggest trying not to look at cyber insurance as overhead or a tax, if you will. It has long-term benefits. I came across a TechCrunch article just earlier this week that I thought did a really great job of giving an example of this. It said, there was a friend who spent months trying to get in shape for a physical so that he could obtain a better life insurance policy and rate, right? And it said, but in his efforts, he did that. He got the policy, but listen, but now he plans on continuing to work out because he feels so much healthier, right, after going through that experience. And so I thought that was indeed, very relatable, right, in terms of getting cyber insurance or an assessment and understanding the product solutions required to position yourselves. That can actually turn into a healthier security posture for the long run, right? It has long-term benefits. And so now that we understand what cyber insurance is and its importance, let's ask why, right? Why? And so Liz, if you can go to the next slide. Thank you. So why do organizations need cyber insurance, right? And I'm sure I'm preaching to the choir here, but as seen in this FBI Internet Crime Report from just last year, in the last 5 years, right, since 2018, the losses from cyber attacks and data breaches has increased by 400%, right? And there's another stat in here that I read that said 62% of small businesses say that their IT environments, right, are much more complex in just the last 2 years, right? The number of networks, users, devices that they have to manage have all gone up, right? You have on-premise, you have private cloud, you have public cloud, you have hybrid environments. When it comes to users, there's employees, there's contractors, there's vendors, there's remote workers, right? Again, and IT departments you're trying your best, right? We understand that you're trying your best, but you're also using a collection of security products, right, from different vendors with disparate interfaces, which adds to even more complexity, right? And in some cases, it actually can limit your security intelligence and create blind spots and add vulnerabilities and cost more money, right? Which in the end ultimately leads to a weaker security posture, right? It's tough out there, and so that is a reality that we all are seeing for sure. Liz, if you can go to the next slide. And so with that, now that we know what cyber insurance is and why it's important, the last point that I'll highlight is why it's important for your organization to be aware of cyber insurance requirements, right? Getting coverage is getting harder and harder. Why? What we just talked about, right? The escalation and the complexity of attacks, the landscape has changed, right? Therefore, prerequisites for cyber insurance has changed as well. And listen, cyber insurance demand, right? Losses by cyber insurance carriers and premiums are all on the rise, right? Premiums are coming down a little bit recently. We've seen that, which is good news, but went up dramatically, right, in the last few years. Now, why? Well, again, high demand in combination with high payouts, right, naturally leads to higher premiums. And so here's the thing. The market is big and it's growing. I didn't put this stat on the slide here, but in 2022, the cyber insurance market was valued at somewhere between 11 to 13 billion dollars, and is actually expected to grow by 19% over the next 7 or 8 years. That's upwards of $50 billion by 2030, right? It's just a growing market. And so with that, and kind of this landscape change, one of the things that we're seeing is that to qualify, right, for cyber insurance, organizations now must meet certain security assessment and control requirements. And we'll have a polling question about that in a minute here. But here's the thing, right? What we want you to be aware of is that another study showed that 50% of organizations that recently received cyber insurance policies had to implement additional security measures, either to meet those requirements for that policy or simply to be eligible for a policy at all, right? And so again, we want to bring that awareness. It's getting harder to be prepared for the right cybersecurity solution in terms of having that in place for your cyber policy. And then finally, like I said, an added bonus for MSPs who might be joining us today. There's a business growth opportunity for you as an MSP as you help your clients, right, with their cyber insurance journey. And there's 2 points here. One is that there's an opportunity for you as an MSP to offer new solutions to your clients, right? Therefore, it could really open doors for you as an MSP to have additional conversations with your client to help them be compliant. There's one example that we got from one of our partners, an MSP, gave us an example and said they had a client with 1,000 users and their cyber insurance costs $21,000 in 2021. But in May of 2022, that client received 2 new quotes. One quote was for $70,000. The other quote was for $100,000, right? From $21,000 to $100,000, almost a 5-fold increase, right? But then that MSP enhanced their client's endpoint protection by adding EDR, and then the new quote that came through dropped down to $27,000, right? And so not only did that MSP help with the right solution for that client to help bring the premium down, but it also highlighted, again, as we talked about in the beginning, the MSP helped their client improve their overall security posture for the long run, right? And again, then the last point in terms of growth for MSPs is that it's an opportunity to enhance their trusted advisor role with their clients, right? Surely we hope today's webinar is helpful and appreciate the companies that are on this call and for taking the initiative, right, and blocking out the time. You're on this call because you care, right? But listen, not all businesses have the resources and understand all the requirements that insurance providers request, or simply do not know which provider to choose, right? And so you as an MSP can act as a consultant in this arena, provide clarity, build additional trust with your clients, right? And that's what you do every day, and that's what your clients need. And so to close out my introduction here, again, we simply want you to be aware of, number one, why cyber insurance is important, and the cyber insurance policy prerequisites. Not only so you can lower your risk, but you can also understand how it helps you with your premium costs. And actually, Nick will give you more detail on other factors that determine the premium cost. But finally, again, it's also something we want to highlight as it's just good best practice, right, for an overall healthy security standpoint for your business. And so with that, I think we're going to have our first polling question next. Liz is going to manage that polling question for us.
Yep, I'm going to launch it right now.
Great.
And I'll give everyone about a minute to answer.
I'm seeing upwards of 72% that say they do have cyber insurance. Oh, it's dropping down a little bit.
I'll give everyone about 10 more seconds to answer.
It's holding. And it's
okay,
good
closing the poll now.
Awesome, thanks Liz. And so yeah, we dropped down just a little bit from that 70%, but still really good to see that upwards, 89% of you guys out there say that you have it, or at least you're investigating it, and that's great news. That's great to hear. So good stuff. With that, I'm actually now going to turn it over to Nick from CNA, so he can elaborate more on specific cyber insurance requirements from an insurance provider's standpoint, right? So if you can take it away, Nick.
Yeah. Hey there, guys. Can you hear me okay?
Yes.
Awesome. Hey, good morning, good afternoon to everybody. This is Nick Graff here. First, my apologies for not being on camera. Ran into some technical difficulties with GoTo and our corporate security on my laptop, but I am here via audio and very happy to be here. As Danny and Brendan had mentioned, I'm here to help with the discussion of cyber liability insurance. A little bit just to mention about myself. So I work at CNA. We are an insurance carrier, a cyber insurance carrier, among other things. And my team and I are responsible for underwriting cyber insurance policies. So I look at these policies day in and day out. And my background is in information security. So I've been a practitioner and now work on the insurance side. But okay, with that foundation in place, to talk about cyber liability insurance. So let's start with a little bit of history. In the grand scheme of insurance, cyber liability insurance is relatively young, about 25 years old or so, compared to multiple hundreds of years when you talk about like insurance for shipping or property or even things like that. So it's relatively young. So it began around 2000, kind of around that first .com boom and bust, and generally covered things like unauthorized access, network security and data loss, computer worms and viruses. Amusingly, some of these old policies had Y2K exclusions for those on the line like myself who are old enough to remember what Y2K was. But it's also important to keep in mind that the internet was a much simpler place back then. E-commerce was in its infancy. This is the days of 56K modems. Getting text to load was a process, let alone multimedia or video. Interestingly, these old policies, they excluded things like rogue employee actions. They also excluded regulatory fines and penalties. And that's still the case in some instances these days, as many jurisdictions may restrict, make regulatory fines uninsurable. Like under the GDPR in the European Union, any fines under that regulatory act are not insurable. In 2003, the California Security Breach and Information Act passed, and that was really a game changer. It greatly affected both the exposure and the insurance industry, because companies, organizations who were conducting business in the state now had to provide breach notifications to any affected residents of the personal data breach or that was affected by an unauthorized party. Following California's lead, many other states passed similar laws. I think today all 50 states and territories in the U.S. have these sorts of laws in place. And this had a profound effect on the private sector. Cyber insurance companies quickly adapted, offering new first-party coverages such as IT forensics, public relations, credit monitoring, and customer notification. And new third-party coverages were also introduced for regulatory defense, as well as fines and penalties that could be related to notifying all of the affected parties. All of that said, the first decade of the 2000s was a small but evolving part of the insurance business. There weren't many claims, and not much mind was paid to it. Most would consider the modern era of cyber insurance to have begun in December of 2013 with the Target department stores breach, which again, I'm sure some on the call may remember. It's kind of amusing that prior to this, naively, there was the thought that you couldn't have what we call a limit loss on a cyber policy. And the limit loss just means that if there was a $5 million limit on a policy, that you couldn't possibly lose the whole $5 million. Obviously, like I said, that is both naive and amusing to look at in hindsight. But again, hindsight is always 20/20. Next slide. So you heard me mention, first party, third parties. So let's talk about coverage. First party and third party are the two main types of coverage. First party expenses are things that are incurred by the insured directly. So if your business, let's say, had a security incident, any costs that were associated with responding to that, those would be the first-party costs that coverage would apply to. Third-party expenses are those that are incurred by, let's say, the insured's customers or vendors. So if one of your customers was unable to conduct business because of a security incident on your network, they might be able to file for third-party expenses to be reimbursed by your cyber insurance policy. So a bit more specifically, on first party, we have things that's called business income loss. So that's, money the company would have made if not for the incident. There's also things like extra expenses, and that can be the replacement of destroyed servers or processors, other hardware, the cost to purchase or replacement software, increased costs to source alternative products, shipping, all that sort of thing, and even things like employee overtime. There is coverage for extortion, which I think we all understand to be like ransom payments, but also areas like privacy. When you think about, forensics, like crime scene forensics, when a security incident happens, well, we need to determine like what actually happened, what data was actually affected. And beyond that, things like credit monitoring, PR consulting, that sort of thing. On the third party side, that can cover things like lawyers' fees, settlements if you and the client settle out of court, judgments if you're found liable, and other court costs such as witness fees, docket fees, that sort of thing. Next slide. One other aspect of most cyber policies is that it actually has what's called a technology E&O component to it. And E&O stands for errors and omissions. I can tell you, the insurance industry, like many others, has lots of acronyms that we like to use. So E&O, errors and omissions. You can think of this like professional liability. For example, if you're an accountant or an architect or a lawyer or a doctor, all of those professions have E&O policies for malpractice. If you're a technology company that's hired to get a company's e-commerce store up and running by the holiday season, and you fail to do so, or let's say the store isn't functional, your company can be sued for damages incurred by your client, which can be directly traced back to the errors or negligence of your company. Another example, if you're a technology product creator, if you create a product or you have a service that fails or doesn't work the way it's supposed to, again, your clients or customers can sue you for damages. When this occurs, the technology E&O insurance policy will pay for the legal expenses and indemnity payments related to the claim. An example of this, there was a company called Butterfly Labs. You may have heard of them. They were a Bitcoin mining hardware company. So they created specialized computer systems that could mine Bitcoin efficiently. But they took the money and then never delivered the product. Got some deception charges by the FTC. They got sued out of business, and they did have an E&O policy that covered some of the losses. But in this case, it just goes to show that a cyber policy can respond even when there is no data breach. Next slide. Danny talked a little bit earlier about pricing, and pricing has gone up on cyber insurance policies. I can tell you from my perspective, having been in the insurance industry for about a decade now, cyber insurance was pretty cheap up until about 2019, 2020. I would say it was kind of underpriced. And obviously insurance, just like a lot of things, when there's more claims, then premiums have to go up. But taking a step back, pricing is based on company revenue. So a larger company will generally pay more for a given amount of coverage as compared to a smaller company. Let's say a small company might pay $5,000 to $10,000 for $1 million policy, whereas a larger company might pay closer to $50 or $60 per $1 million of coverage. Most people, understandably, will focus solely on the amount of premium paid, like the cost of the policy to them. But there's other factors that you should consider. Just like when you're considering your automobile or homeowner's policy, there's the deductible. On a commercial insurance policy, we call that the retention, but the same idea. The retention is equal to the deductible. There's also things like the waiting period. So on most cyber policies, the policy might not kick in until, let's say, 8 to 12 hours of downtime. And as you as the insured, you probably like a shorter waiting period versus a longer one. Other things like the policy wording can be some more broad coverage. Not every cyber policy is going to be the same, and in fact, I'd say just about every cyber policy from a different carrier is going to have some differences in there. There also can be policy exclusions. So looking at the policy, like what does it cover, what does it not cover? And then there's co-insurance. So if your policy has co-insurance, that would mean, let's say 25% co-insurance would mean that if you as a company file a claim, 25% of the claim costs would have to be paid by yourself, and then the insurance company would pay the remaining 75% up to the policy limit. So just like automobile and homeowners insurance, who insures you matters. Are you insured with a State Farm or Allstate, or did you choose a cut rate insurance company that offered inexpensive coverage like a low premium? But at the end of the day, like most things, you pay for what you get. Another topic is the idea of insurance towers. I can tell you that we, CNA, the largest insurance policy, cyber insurance policy that we'll write is $10 million. And $10 million both is and isn't a lot of coverage, depending on how big your business is. If you're someone like Google or Facebook, $10 million is a drop in the bucket. So how do those companies get hundreds of millions of dollars of cyber coverage, which companies like that have? The idea is that you build a tower. You're working with your insurance broker. That broker will line up a number of different insurance carriers. In this case, let's say 10 carriers. And one carrier will insure the first 10 million, a second carrier will insure the second 10 million. And the broker manages all that on the back end. You only have one policy that you have to deal with as the end user. But understandably, that first carrier will get more premium for their $10 million as compared to the top carrier from 90 to 100 million, because they have a little more leeway, a little more insulation between them and a claim. Last on the slide is I'll talk about the topic of reinsurance. I talked to Danny and Brendan about this a little bit yesterday. I wasn't sure if we should include it or not, but I think it is interesting in the broader scheme of insurance. So if you ever hear the term reinsurance, reinsurance is insurance for insurance companies. So we, as an insurance company, we have reinsurance. So the whole idea of insurance and the whole industry of insurance is all about spreading the risk, spreading it as broadly as possible. And so within reinsurance, there are two types of reinsurance, facultative reinsurance and treaty reinsurance. You can think of facultative reinsurance, it just is applied on a per policy basis. So let's say if we as an insurance company have a single company, a single account that we think is just a little out of our risk appetite, we might purchase some facultative reinsurance to help offset a potential loss there. Let's say if it's a $5 million policy, maybe we purchase $2.5 million of FAC reinsurance on that. More broadly, there's also treaty-based reinsurance. And so treaty reinsurance applies to all policies that meet preset conditions. Like, is that business new business or renewal? Is there a certain revenue threshold? Is there a certain limit, like minimum $3 million of coverage? What's interesting is that it relies on the insurance carrier to properly underwrite the policy. Reinsurers might review our portfolio once a year, but otherwise they don't take part in any of the underwriting of an individual policy. So there's a lot of trust that goes into it. They're trusting that we are adhering to our underwriting standards and not taking on super risky accounts, because then the reinsurers might have to pay out if those accounts have claims. And so we have to present annually to our reinsurers. And I can tell you that it's a very big deal. It's very important to us to secure our reinsurance, just like it's important for your company to secure its insurance. We have to showcase our level of due diligence and knowledge on the topic. And like I said, it's just all about spreading the risk very broadly. Next slide. And so let's talk about the application process. I think there's about a third of the companies on the call that you don't have a cyber insurance policy today. Maybe are investigating it but don't actively have one. We can talk a little bit about what goes into applying for cyber insurance. Now, when I talk about an application, I'm not talking about like an app on your phone. I wish I was. I can tell you the commercial insurance market is kind of old and stodgy and not very quote unquote with it with the times. So most applications these days are PDFs. You at least now can fill them out electronically, but it really was not that long ago that I was still getting ones that were filled out by hand and faxed to us, like with a fax machine. But we're moving there slowly. So your broker will provide you the application. You'll fill it out, and then they will send it out to the carriers that he or she works with. Interestingly, I, as an underwriter, very often will receive a competitor's application. So I might receive an application from AIG or Beasley or Travelers or things like that. And that's very common. It's not a big deal within the insurance industry. We all kind of work with each other's applications, not a big deal. We also use supplements to ask other questions. One of the most important ones we have is our ransomware supplement, which is about 25 questions that focus more specifically on that risk. And it just helps us to be agile to market changes. Our applications have to be filed with state regulators, so that takes time. It's very slow. But short supplements, we don't have to file with regulators, so we can, again, add questions, remove questions. And we know that the cyber market changes all the time, and so we try to be responsive to that. In addition, once you fill out the supplement or the application, your carrier might request a phone call with you just to talk through the information security program at your company. We understand these are complex programs with policies, procedures, things like that, and it's hard to gather all that information or really understand all that information just in one single document. So I would just take that as an opportunity, though, to present everything that you're doing. It can be a really good time to have some dialogue with your carrier to understand your coverage, and usually can be a very fruitful way to communicate. Next slide. The last for me, just to talk about best-in-class controls, just from an insurance carrier perspective. There's a lot of stuff on here. I'm sure this is nothing earth-shattering or new to people on the call. But I'd say 4 items that are probably of most importance if I'm looking at an application for insurance with us. One is endpoint detection response. We want to see that on all endpoints and, let's say, non-cloud servers. And we really do draw a distinction between true EDR and what might otherwise be just kind of next-gen antivirus. I can tell you, we put these in place, or these requirements in place based on the claims that we see. For insureds that have real EDR in place, we see a far lower level of claims happening, or at least lower severity claims. So when someone gets on their systems, they're able to either stop it more quickly or at least contain it versus having it spread throughout their entire network. Having MFA deployed everywhere feasible, we absolutely want to see it for all, let's say, remote connections, like all VPN connections. You'd be surprised, there still are companies out there that are not requiring MFA for their VPN. But same thing on cloud resources, any access to that, any sort of privileged accounts, any sort of RDP or VDI. But we want to see MFA deployed everywhere it can be. Third on the list would be security awareness and phishing trainings regularly. I would say at least a couple times a year for both of those. The idea is that we know employees are on the front line. They are the ones that are going to most likely to receive phishing emails and social engineering emails. And in my previous life as a pen tester, if you want me to get into your network or ask me to attempt to get in, I can tell you sending a social engineering email is far easier than me scanning your web servers and firewalls and things like that. I only need to get one person to click on my malicious link, and now I have a foothold on your network. So training your employees to be wary of these sorts of attacks is vitally important. And then last on the list is we really don't like to see end-of-life platforms still in use. So things like Windows 7, Windows Server 2008, various versions of Linux, CentOS, things like that. We just know that these are systems that are out of support. They have unpatchable vulnerabilities in them, and so that really is kind of a negative mark on a company that's doing so. And we know it's not easy. We know that all platforms eventually go end of life, but a company that is staying ahead of that is being mindful of when, let's say, Windows 10 is going out of support in 2025 and moving off of that before that end of life occurs. That's something that we view very positively. And so with that, I think I will turn it over to Brendan.
Thanks, Nick. That was great. A really good overview of what's happening in cyber insurance. I'm going to continue and talk more about some of the control frameworks that Nick mentioned and our WatchGuard Unified Security Platform and some of our solutions and how they can help with that. So next slide, Liz. Nick talked about establishing different control systems. And I'd really emphasize to people, you don't need to reinvent the wheel. There's a lot of good cybersecurity control systems out there. We're curious to see what people are using today. On our website, you can see WatchGuard uses ISO 27001 as a certification for best practices in information security management for our WatchGuard Cloud. Seeing a lot of people adopting the CIS control framework, especially here in the United States. NIST is important for federal business, Cyber Essentials in the UK. Just interested to see what people are using. And like Danny said, cyber insurance can be treated as an opportunity. It can help you justify and get the funding and the time dedicated to getting a good control framework in place for your business today.
I'll give everyone 10 more seconds and then I'll close the poll. And we're closing.
Great, and that's really interesting. We have a good mix of people. The 27%, interesting that kind of matches what we saw for about 30% of people who don't have any cybersecurity insurance yet, are maybe still investigating. So I wonder if there's a correlation there that the people who have policies in place have some kind of framework that they're working against. Next slide, Liz. And what I'd highlight about all of these information security control frameworks is there's a lot of commonality. For example, CIS has section 7, 5, and 6, talks about the need to perform automated vulnerability scans, both internal and 7.6 for external faced enterprise assets. Whereas in ISO, that's in section 8, and they talk about management of technical vulnerabilities. So all of the different frameworks and even a vertical specific regulation like PCI DSS for credit cards will list out the best practices you should be doing in your security system and how you should update and manage against that. And I'll put a small plug in for, we did a webinar back in April where we talked more about control frameworks and complying with industry regulations that goes into more detail like this. And it's a good reference maybe to take a look at it if you're one of the 30% who hasn't established or picked one yet. But I'd really emphasize, getting this insurance is an opportunity to really get your house in order, justify some budget spending, getting people dedicated to getting good set of information security controls and an information security management system in place for your organization. Next slide. So we're going to go to a polling question again too. Nick highlighted there are different product things that he and as an insurer at CNA look for. We've got an audience around the world. I'm sure there are a lot of different insurance companies people are working with. It's interesting to share within the group here and for people to see what type of products are you being requested to have installed as part of your cyber insurance policy. So we've listed a few here. Again, it's not really a scientific survey. We're just kind of interested to see exactly what comes up in these type of policies. And again, we'll leave this for about a minute too.
Yep, I'll give everyone about 30 more seconds.
MFA was at 100% there for a while as the votes are coming in.
About 7 more seconds. Everyone get their votes in. Closing the poll now.
Okay, and this is interesting. It goes back to what Nick said in his presentation. Multi-factor authentication requiring that it's such a great preventative mechanism to ensure that people logging in are who you really expect they are. And also, of course, endpoint protection. It's kind of the classic security and control that's been in place for a long time and evolved over the years. But we can see that different product types are being requested by these cybersecurity insurance policies. And it's a mix. It will depend on the company, maybe the amount of coverage, where you are in the world and things like that. But a couple of key themes there are the MFA and endpoint protection. So next slide, thanks. So at WatchGuard, we have a unified security platform, which is our platform where we bring a range of security solutions to the market. And we have 4 key pillars in this. We have network security, which is our firewall solution. We have secure Wi-Fi access points. Identity security includes our multi-factor authentication. And then endpoint security is our endpoint detection and response on endpoints around an organization. All of these solutions are managed by the same console, our WatchGuard Cloud, but it's not just a management framework. We also share information, threat intelligence between all of the different solutions. Earlier this year, we launched our ThreatSync XDR solutions, and that's a layer where we detect and correlate and prioritize for incident responders different things that may be going on in the organization. We share identity information between the different solutions. So if you have a firewall that's providing VPN access, we work with our MFA solution to provide convenient, easy to set up MFA for that VPN access. So let's take just a quicker look at some of these solutions. Next slide, please. So if your policy is looking for intrusion prevention, intrusion detection services, that's part of the basic security service in every firewall that WatchGuard provides today. We also have a lot of other classic security services in there, like antivirus, which is a great complement to whatever you may have on the endpoint. And then we have advanced security services like our APT blocker, Intelligent AV, which are more malware scanning engines that add to the level of inspection of files coming through your network. Next slide, please. MFA was at 100% in the poll there for a while, and WatchGuard for several years now. In fact, multi-factor authentication with our AuthPoint product was the very first product we launched in our WatchGuard Cloud solution. We provide full push-based strong authentication MFA solution. We work with hundreds of different applications through our extensive technology partner integration program. Our product provides an SSO portal as part of this. So often it's easier to introduce security into an organization if you're adding a layer of convenience to it. All of our MFA is mobile phone based, but for those people who can't deal with that, we do have hardware token options. So really good solution from WatchGuard to cover this. And I really like the way we've integrated this with VPN capabilities on our firewall. So products working together to complement each other and add that security. Next slide. One of the things Nick mentioned was end-of-life software, out-of-date software, and how patching and looking at status of software you're running is important. Here's an example a partner shared with me of a addendum to a cyber insurance policy. And people don't have to read to everything, but the key point here is that they will limit and cut the insurance payout if there was a cyber incident that took advantage of neglected software exploit. And that means if you have unpatched or end-of-life software that was exploited to lead to the cyber incident or breach, they will cut the amount that's paid to you. And that's on a sliding scale all the way up to if you have software that is over a year out of date, that $1 million on your policy will go down to just 50K. So this highlights some of the details cyber insurance are getting into. Now you won't see this on every policy. It's an emerging field, but something to be aware of. Now, if we look at the next slide, please, Liz. Thank you. WatchGuard provides endpoint security, protection that everyone is seeing as part of their cyber policies. EPP is our next generation antivirus signature-based solution that runs on endpoints, but we have evolved to a full endpoint protection, detection, and response solution, where we do things like our zero trust application service. We won't let an application execute unless it's a known good application. And we rely on machine learning, artificial intelligence to determine that, and even go to a human review by our security team if there are still doubts about something. But one thing I really want to highlight here, keying off that last slide, is all of the WatchGuard solutions do vulnerability assessment. So we can check for out-of-date services, end-of-life software, unpatched software that may be running on your endpoints. We have a patch management module that's available with EPDR that you can use to patch and keep your systems up to date. So really good capabilities there that can tie into what you see in the control frameworks and what your cyber insurer is asking about. Next slide. And I want to reiterate that all of this is managed from our WatchGuard Cloud solution. So that one console is your single pane of glass, your single access to set up and configure all of these solutions. If you have a firewall, we can do a zero touch deployment of that out to remote locations. It's multi-tier, multi-tenant. Danny mentioned perhaps there are some managed service providers on the call. Again, a multi-tier, multi-tenant architecture. And we've put a lot of emphasis into minimizing alert fatigue, especially through our ThreatSync XDR solution. So a lot of great capabilities. We can follow up on information on the WatchGuard website. We also have some material available for those of you that are using NIST or CIS controls that map those control frameworks to our WatchGuard solution. So we can make that available after the webinar too. So next slide. That was a quick overview of what we wanted to cover on the WatchGuard security solutions, and we've left some time for questions. I know this is an emerging topic that people are still learning about. So let's see, Liz, have we had questions come in during the webinar?
We have. The first question is for Nick. And Lenny is wondering if CNA provides insurance in Canada.
Yes, we do. We write insurance in US, Canada, and like 120 countries around the world. So we are absolutely international.
Perfect. Another question is, it seems like premium costs have increased over the past 1 to 2 years. Why is that?
Yeah, I can tell you, it's unfortunately due to a large increase in claims. I'd say ransomware claims have been a huge driver of that. Right around 2020 to 2021, ransomware claims went up exponentially. At the end of the day, an insurance company is a for-profit business, just like any other. And so when our costs go up, we have to offset that some way. And unfortunately, increased premiums is one of the ways to do so.
Awesome, thank you. Next question. Are you seeing insurers pulling out of this space as costs have increased?
We have seen some insurers pull back. It was interesting during the 2019 and 2020 times. There were other carriers that we saw as they would just kind of write anything, any business, and wouldn't ask any questions. And I'll admit to us that didn't seem prudent. And when push came to shove and a lot of claims came in the door, other carriers realized that they were not in a position to write this coverage profitably, and so have pulled back from the insurance marketplace. That said, there are still multiple dozens of carriers out there, so there are plenty of options for most businesses. But just like anything, it's not easy to do.
Got it. Thank you for answering that. And then next question is, how does cyber insurance cover payments for ransomware?
Yeah, I can tell you that just about all cyber insurance policies will cover ransomware payments or extortion payments. Most typically, they will leverage a third party that will actually do that company that they'll do the negotiations with the threat actors. Typically, we can negotiate the initial demand down at least 50%, give or take. And then those people will also handle the taking money and turning it into the cryptocurrency, whatever the one that the threat actor wants, and then facilitating that transaction from occurring.
Awesome, thank you. And it appears the last question is, are there any cases where ransomware wouldn't be covered?
The only case that I can think of is where it would be, let's say, prohibited by law. And right now, off the top of my head, I don't believe that that exists anywhere. So as long as paying ransom is legal, then it will be something that is covered. I think I mentioned earlier in my talk that there are some jurisdictions where regulatory fines are not insurable legally, like let's say under the GDPR in the European Union. So if a country were to pass a law saying, hey, extortion payments are illegal, well, then that would kind of tie our hands as an insurer, and at that point, then those extortion payments would not be covered.
Got it. Thank you for answering that, Nick. It appears that that is all of the questions from the audience. Thank you to the presenters for this amazing webinar, for all this information. To the audience, we will be sending you the slides and the recording of this webinar in the following days. And that's all from me. Does anyone else have any final comments on cyber insurance?
I've maybe one last question for Nick. Liz, Nick, are there any scenarios where a cyber insurer may contest making a payout? What are the things that would raise red flags for you?
Yeah, that's a great question, Brendan. I will say, on one hand, you're like, I'll speak for us, for CNA. Obviously, I can't speak for other carriers, but in general, just given what I've seen in the industry, an insurance carrier is not going to deny a claim. Let's say if you've attested on your application that you have EDR deployed on your endpoints, or let's say that you patch all high severity patches within 30 days. If a claim occurs and it turns out that, let's say, the affected machine that one machine didn't have EDR on it, or that one machine was missing some patches, that is not going to rise to the level of getting your claim denied. We as cyber insurers understand that information security isn't easy. It's rare that you're ever going to have anything at 100% deployment or 100% patching. Usually that the first 90% is really easy, and that last 10% is difficult. And we know that machines can miss a patch or miss piece of software for various reasons. Now, on the flip side, if you were to attest that you have EDR deployed on your systems, and it turns out that you don't have EDR deployed at all, or that you said you're patching and again, you're more than a year out of date in most of your major systems, things like that can make potential issues rise up in the claims process. I can tell you that an insurance carrier doesn't want to deny a claim, and you might look at that statement, listen to that statement skeptically, like why would you say that, Nick? But honestly, it really isn't good for business on our end. Anytime we do deny a claim, it's only after much consideration. And the thing is, we know that if we deny a claim, it's almost guaranteed to end in litigation. Not only that, but then bad PR for us. I mean, you can, the second there's the cyber insurance carrier has denied a claim. I mean, that makes news in the information security world. There are plenty of CISOs that I've talked to over the years that have thought, and some still think, that cyber insurance is snake oil. So we know it's not good. It's not something that we want to do. We genuinely do not go out of our way to deny claims. That said, when we're underwriting the policy, that's why we really want to understand, what is in place, what is the overall position, maturity of the security program today. And we know that security programs aren't perfect, but that's where we just want a company that's going to be forthcoming. Hey, here's what we're doing today. Here's what's on the roadmap for this coming year. And then we can underwrite the policy properly. And that way, if we understand the program, and hopefully the insured understands what their policy covers and doesn't cover, when both of those things are in place, that's the best case outcome for everybody involved.
Great explanation. Thanks.
Yeah, Liz, I'll just add just thanks to everyone for joining today. And for that 30% who don't have cyber insurance, hope this session was educational for you. Definitely reach out. We're here to help with product, and also, again, get help from your managed service provider and have them advise you as well. But thanks again for joining us.
Thanks, everyone. Have a great rest of your day.
Thanks, team.
Thank you.